Good evening and welcome to this evening's meeting of the Rotherham District Council's Audit and Standards Committee. I need to cover a couple of bits of housekeeping before we start. Please can members remember to turn their microphones on before speaking and make sure that they press the nearest button to them, as the system has been programmed to display their specific seat and name. With that in mind, can members also please not move seats or the microphones. If members move and take their microphone with them, the correct name will be displayed, but the camera will show an empty seat. And finally, but just as importantly, can please remember to turn your microphone off when you finish speaking. If you do forget, then the camera will still be on you while the next member is speaking. And I must do that myself. Joining remotely this evening, we have Councillor Chaz Pearce, who will leave his camera on during the meeting but will not be able to take part in any, and be able to take part in debates, but will not be able to vote on any matter. We also have Duncan Ellis, our 151 officer and the interim Deputy Chief Executive online, and he'll also be keeping his camera on throughout the meeting. And Gary Angel, the Council's Internal Audit Manager. Also online this evening we have Darren Wells, our lead external auditor from Grant Thornton. And in the chamber this evening we have Lorna Ford, Chief Executive Officer of Rotherham District Council, Ben Hook, Director of Place and Climate Change, Ola Janowitz, the interim CFO and our Principal Accountant, Anna Everett, Corporate Programme Risk and Improvement Manager, Mark Adams, our Digital and Customer Services Manager. There are no standard matters on the agenda tonight, so we've only got dealing with audit matters. So we also have Mr. Patrick Farmer, our independent member for audit matters, with us. Welcome, everyone. So on to the agenda. Can I please have authority to sign the minutes of the last meeting as a correct record? Yes, thank you. Thank you. Thank you. Apologies for absence?
None received, Chair.
Thank you. Any additional agenda items? No, thank you. Disclosures of interest. Receive any disclosures of interest by members of personal and disclosable pecuniary interests. I'm just going to, because something I may say later, I'm just going to remind people that I am a member of Bexhill Town Council, and that's in relation to agenda item 6. Yes, Councillor.
Rotherham District Housing Company.
Thank you. Right, thank you. And please remember to repeat it if it becomes relevant when we discuss it. Thank you. As I said, there are no standards reports tonight, so part B is the audit reports. Agenda item 5 is the report from our external auditors, Grant Thornton, and it's a progress report, a sector update, and Darren Wells, our Chief External Auditor, is with us tonight. Mr. Wells, good evening.
Good evening. Thank you, Chair. Good evening, members. Can you hear me okay?
Yes,
Marvellous, thank you. So I won't say very much about the report. I will take it that it stands by itself and that it's been read. Its purpose is really to set out our progress over the financial audits that are open. So there's 21-22 and 22-23. We give a position statement on 21-22. We haven't started the financial statements audit of 22-23 yet, but we have, and we are in the progress of the value for money work for 22-23, and that should come to your next meeting. The second part of the report is very much about a sector update, so some of those items that are happening in the wider local government sector that we think would be of interest to you as members. That's all I was going to say, but I'm happy to pick up any questions that members may have.
Thank you. Any questions from members at this stage? Councillor Barnes.
Yes, I was just wondering what the timetable will be on our current, in other words, last year's accounts. Will we get a report by December, do you think?
Did you hear that, Mr. Wells? Will we get a report by December?
Thank you, Chair. Yes, I did hear that. I would certainly hope so. So as we've reported to you previously, an awful lot of the 21-22 audit had been completed. With those two items that we highlight on the report are the only outstanding elements. One of them I'm waiting for work to be completed at the East Sussex Pension Fund so that I can rely on that work. The only other aspect is to resolve the audit queries around the valuation of land at Blackfriars.
And unfortunately, you've frozen, but hopefully you'll come back in a moment.
In December.
Yeah, you froze for a part of that, Mr. Wells, but I've got a couple of questions on those things you just mentioned anyway, so perhaps you'll get an opportunity to say it again. With my absence of any other questions at the moment, the county pension fund, you quote the delays staff availability. Where's the staff shortage? Is it your end or East Sussex Pensions end?
So on the pension fund side, it's been absences from the pension fund side primarily, but that work is in progress. I anticipate it will be finished in the very near future.
Yeah, thank you. And then on the other one, on Blackfriars, I don't think everyone necessarily knows that the query over the valuation was that we were trying to, or we valued it at naught because it was rough land that we spent lots of money on getting into a position where it's now valuable. But I wondered, I could hear more concerns because I know you didn't like that valuation. You've asked for it to be redone. So I wondered what your concerns and issues were over the valuation at Blackfriars, please.
Thank you. So it's not so much that we didn't like the valuation, but we had some challenges to the valuation, and that principally is based on the fact that in March 21, the accounts included a valuation for the land of 4 million. In March 22, that same land was then valued at 0. So initially we started with, well, why has there been such a dramatic change? When we got an explanation for that, we felt that the valuer hadn't considered the requirements of the Code of Accounting for Local Government. And the valuation method has to consider the basis on which an asset is held. So if it's an operational asset, then it's quite right and appropriate to value it at its existing use. The land at Blackfriars is classified and held by the council as a surplus asset. And as a surplus asset, the code requires that it's valued at the best and highest use to which that land could be put. So even as land held as, even if not used for housing, it will have a value as mere amenity land, which will be more than 0. So that was the basis of our challenge. As I understand it, officers working with the council's valuer obtained a second valuation, which was, I think, came in at around 2 million. When we looked at that valuation, we queried the inputs to it because we felt that they hadn't used the correct inputs. And I think the council's own land estate officer or estates officer agreed with our assessment of the inputs, So I think that the council was then asked its valuer to produce a second valuation, which is what we're now waiting for.
Thank you, Mr. Wells. I very much got the idea it was a work in progress. Councillor Barnes has a question on that.
Yes, well, there are two. One of the elements is clearly that we misstated in the initial valuation what land was involved. There was land which we're marketing, which should have been included, and clearly that will have a price. I wait to see what the price is. But really I want to explore a little more, Chairman, this notion of the value of a land which was bought by the council something like 40 years ago and has sat fallow ever since because we couldn't afford to develop it. In other words, if you were doing a viability assessment as a private developer, you would have said this site was unviable. I know a little more about this, and I better just declare that I was one of the founder directors of the housing company, although, as you know, I am no longer a director of the housing company. We obtained a grant of 8.3 million, I think, from Homes England to put this site into a developable site. In fact, the cost when estimated was then about 9.6 million. In practice, for reasons which probably need to be explored by Gary Angel and his merry boys, that in the end ended at 19 odd million pounds. Assuming that's the final figure, but I'm not sure it is. But maybe that we can come back to that. But it seems to me if you've levelled that sort of money to bring the site up to developable standards, you can't really expect the developer then to pay those costs and still make a profit on the housing. It's complicated because, of course, the developer here is the Rother Housing Company. But if it's a private developer on the bits of land that we're going to sell, then he will be in exactly the same boat. So although we're talking about notional valuations, this one really is the price the market will bear. And frankly, the price the market will bear has to be naught. Now, I'm just wondering whether Audit can show this in some other way, because if we are ever to invest in other sites which are not viable commercially in order to get the much needed housing in Rother, and as you know, we only have 10% of land that can be developed, then we need to find a way of getting this into account as investment for a development purpose rather than actually as a valuation. Because otherwise we will handicap all our developments and we will be left with a fallow site which we cannot dispose of.
Thank you. I'm not sure there was a question there that Mr. Wells can answer tonight. But he could express a view.
I would welcome a constructive thought as to how we might handle it to actually reflect what the council is doing and not what it notionally should be doing.
Thank you, Councillor Barnes. Mr. Wells.
Thank you, Chair. So I think the only answer I can really give to that is it's very much for the council to show how the accounting code has been followed in respect of assets that have to be held at best and highest use, and that's the basis of our challenge. And there may well be a separate distinction between the accounting valuation, as we call it, for a particular asset, and the business case for a particular asset, and those two can be quite different.
Thank you, Councillor Barnes.
I must say, I hope somebody will challenge the value of 4 million that was set on in the previous accounts, because it will never fetch that money.
Yeah, thank you. I think that's probably a matter for not now, but for discussions with Mr. Ellis and Ola. Thank you, Councillor Barnes. Are there any other questions? Oh, sorry, Councillor McGirt.
Thanks. I wanted to ask a question about the pension fund that's referred to in the report, and it's about the sustainability of the pension fund. So I note that the pension fund has become an asset of 10.5 million from a liability of 18 million, if I'm reading it correctly. And the report begins with a description of the needs for local government to meet sustainability targets on page 13. And I don't know, Darren, if this is something which you can comment on, but I just wonder that given the report describes the need for most LGPS funds to make an average of 1.5% over the next 20 years to ensure they're fully funded. If East Sussex County Council pension fund were to divest from fossil fuels, would that have a significant impact? Is that something which will mean the pension fund can deliver the 1.5% potentially over the next 20 years still, while divesting from fossil fuels?
Thank you. Through you, Chair. I'm afraid that question is beyond my remit, and that's very much for the stewards of the pension fund and their investment fund advisors to answer that sort of question, I'm afraid.
Thank you. Councillor Barnes.
I've two quite separate subjects. On the pension fund, the advisors of the pension fund have said absolutely clearly that the right policy is to persuade the companies that are currently investing in fossil fuels actually to invest in renewables and climate friendly. They have the capital to do that, and at least one of them is trying to do it, and counties at AGMs saying that that is precisely what they should do. And that is a better route, frankly, than divestment, because these are the firms that actually have the money to invest in renewables and should be doing so, in my view. A separate topic, because I don't expect Darren to comment on my words, is just a query, and it's probably for our own officers rather than for Darren, which is what's holding us up on Mount View, because that's been sitting around for some years now.
I think Darren can, because there was a reference to the fact that they seem to have been reassured with Mount View, but we go to Lorna. No. Ben Hook.
I want to be a little bit cautious about what I say, because obviously it's the subject of commercial negotiations at this stage, but I would say that obviously there's the site is split into two fields. The main field is under an option with the NHS Partnership Trust, who are delivering the mental health care facility. They've activated the first stage of that option. They have a second stage of that option for the remainder of that field. We are in negotiations with another entity. I'm happy to brief Councillor Barnes and others offline, given the fact that there's a commercial sensitivity around it. But we are in negotiations with another entity regarding the other site to bring that forward.
Thank you, Ben.
That's reassuring, thank you.
Councillor Thomas.
I'm interested in what you say on page 13 about sustainability reporting. It's good to see that this is going to be coming to be a thing. Can you tell me, is this now underway? It strikes me it could be very useful because it would enable us to see how the authority is getting on with achieving its climate change targets. So it sounds extremely interesting development. Can you say a little bit more about it? Where are we with it at the moment, please?
Thank you. Through you, Chair. I can't say too much more actually than the report that we highlight in the sector update. I think it's fair to say that sustainability reporting is still in its infancy. There are standards out there. We are seeing more widely commercial firms adopting an approach to sustainable reporting. It's very much less developed amongst local government. So I think it's at the start of the journey, but it's clear there's a drive and an intention that it will become mainstream. Over what time period, I couldn't say at this point in time.
Councillor Thomas.
To sort of follow up on that, I mean, would it be helpful for the council to give you a steer and to say, yes, we'd like to see you press on with this as quickly as possible because of the value that it could actually have in relation to the council's climate policies? Would that be helpful for the council to say, yes, we really want you to develop this side of your work, please?
Well, thank you. I know the council's enthusiasm, but it's not us as external auditors that's driving this. All of local authority financial reporting and be it sustainability reporting are under the remit of the Chartered Institute of Public Finance and Accountancy. So they in many ways, in consultation with the sector, determine the scale and the pace of reporting. So we're mere passengers in this to that extent.
Actually, through you, Chair. Thank you very much for that answer. That's very useful. My next question is about something different, and it's one of those things where they say it's a good thing to ask a stupid question, so here it comes, basically. You've got a section on reserves, and I'm very pleased to see you saying that the financial position of the authority remains sound. You've got that, I think, on page 19. It's very good to see that. But also, I'm seeking to understand exactly what's happened with
I
this.
think you've jumped to 19.
Had I jumped to the next report?
Yes.
In which case, my apologies. I'll come back to that later.
Okay.
Thank you, John.
Thank you, Councillor
Thank
Thomas. I've only got Mr. Farmer.
There's a section, Darren, in your report on the fact that meeting the audit timelines are unachievable. But that's very much a generalisation as to why they're unachievable. Could you tell us why specifically they're unachievable for this council?
Thank you. Through you again, Chair. So all of the sector updates are very much a commentary on the wider local government sector. We've made that statement about the timetable being unachievable. It's our view of auditors from all firms being able to meet the local government financial deadline for completing audits of the financial statements. And I think for 22-23, that's November. For 23-24, I think it's September, or it may even be September for 22-23. And that's against a backdrop of only 9% of local authority opinions being given for local government in 21-22 by the then deadline of November 22. So a very low percentage. Members may be aware that across the sector there's a large backlog that is growing, and many stakeholders have been determining how to address this position. And the Department for Levelling Up Housing and Communities has recently issued a consultation on its proposals to try and resolve the situation. And they're consulting on a number or a series of statutory backstops so that each year's outstanding accounts should be completed by the statutory backstop. And if the audit wasn't complete for that year at that statutory deadline, then the auditor would issue a qualified audit opinion. And that could just be to say we can't take any assurance over the financial statements. And it could be a disclaimer, the kind of worst type of opinion that could be given. I don't think that we're likely to be in that position for Rother. You have the 21-22 statements, an audit that's not finished, but that's localised to a couple of issues that were discussed earlier. We haven't started the 22-23 audit yet, but I think it's certainly possible to get through that audit quickly on past experience. I think the 21-22 has been the exception rather than the norm.
Thank you, Councillor Thomas.
I'm very grateful to Mr. Farmer for raising that, because I was also puzzled by that section of your report. You gave two main reasons why there are these delays. The first was that there's a lack of clarity about what the auditors thought, which slightly surprised me, because I would have thought that auditors would carry out their investigations in the interest of efficiency, effectiveness and accuracy. So I'm not quite sure where the lack of clarity could come. But the other one you did mention, it seemed to be very clear that there was often a shortage of skilled staff in local authorities to carry out this work. And then, so that made perfect sense to me. And a question comes, obviously, to mind in relation to that, namely, is that a problem with Rother? Is there a lack of skilled staff to actually help you with the audit work? My next question is the solution. You say that the solution will be that the Section 15 officer will work with audit committee members to approve the final accounts by the statutory deadlines for the audit opinion to be issued at the same time. And that led me to ask a question. Does that mean, and I think this might have been implied by your previous answer, that the standard of audit will not be as high as it would be if you didn't have to have recourse to that expedient? So those are two questions. Number one, is it true with Rother that there's a lack of skilled staff which delays the work? And the second is, this solution that it's working with audit committee members, the Section 15 officer doing that, which will enable the reports to come out in time, does that mean that the auditors will not have as careful a look at things as they would do otherwise, and therefore we could have slightly less confidence in your reports? So there are two questions. Thank you.
Thank you. Through you, Chair. So the second point first, because I've forgotten the first question already. Apologies. So the second question first. The work of the auditor won't be impacted. So we're required to audit the financial statements in accordance with international standards of auditing. And before we give an opinion, we ensure that our work meets those standards. I only have a slight caveat to that statement, and that is one of the solutions to the significant backlog that's emerged with local government auditing. One of the solutions proposed is for the National Audit Office to amend the Code of Audit Practice, which again forms part of the framework against which we conduct our work. And that amendment that's being considered is to reduce the depth of work that auditors are asked to do on auditing property, plant and equipment and ensuring the correct disclosure of pension liability. And those are two areas over the last 5 or 6 years, where the Financial Reporting Council has pushed all audit firms to do much more detailed and in-depth work. So that's driven an explosion of increased input, and ultimately it has flushed out issues, and the resolution of those issues across the local government sector has contributed to the delayed and untimely audits being completed. But however the framework for conducting an external audit is shaped, you can be assured that within that framework, you'll be able to take reliance on any completed work that we undertake. It may be a communication message to you and to other authorities about how the auditor's work will change should there be any changes to the Code of Audit Practice. But the quality against any revised framework, I think you can take assurance on. And sorry, Councillor, I can't remember your first question.
It's okay, Darren. I'm going to stop him asking it again because I'm going to say something on it. Because I had this in mind to ask, but I don't think it's a question for Darren to ask. It's for our officers. And we pose the question, and I wouldn't expect an answer tonight, but are we confident that we have the right number of people in finance dealing with these matters? I don't want an answer tonight. Councillor Barnes.
Yes, one thing that Darren said slightly worried me, and I wondered whether we've taken part in this consultation, because we haven't been informed that we have. But at a time when a number of authorities, for a wide variety of reasons, not one reason, are issuing Section 114 notices, for local government audit not to proceed in the depth that it currently proceeds, I think would be dangerous.
Thank you. In fact, I was going to mention tonight, the audit consultations finishes on next Tuesday. I know Duncan is in the process of submitting our thoughts on that. I mean, I'm keen to see that the costs of previous failures aren't put on all local authorities and that they're shared amongst the people who perhaps need some of the, not blame, that's the wrong thing. But also I wanted to say, I took part last week in the South East Region Audit Chairs Forum, and actually I got the impression there we are a lot further forward. And there weren't many there, but we are a lot further forward. For a start, we have Mr Farmer sitting in the room, and some people are only just recruiting their Mr Farmers and only beginning to think about it. And in fact, a lot of them have outstanding audits a long time before 21-22. So I think we're actually, I wouldn't be complacent, but I don't think we're doing a bad job. Thank you. Any other questions for Mr Wells? No? Okay. Mr Wells has agreed to stay for just the beginning of the next item because I've got a question to ask him. I can't remember what it is at the moment, but I'll get there. So thank you. So we note the auditor's report. Noted? Thank you. I think it is because I haven't got that page on my agenda, so I think it is just for noting. Thank you. So agenda item 6, the statement of accounts for 22-23. Is it Ola or Duncan? Okay, Ola.
Hello. I think, thank you very much, Councillor Jason. I think the question you may have had for Darren was the timetable, possibly, when the audit is going to start.
Well, no, can I get in first then, just before we do
Okay.
this? In the statement of accounts, you'll see that 4 objections have been lodged or been received about those accounts. And I know that Grant Thornton have accepted 3 of those 4 for further investigation. So my question was going to be, does that have much of a knock-on effect to the delay if you're also spending time investigating objections? Or is that part and parcel of the audit, very much so? Darren?
Thank you, Chair. So yes, it's clearly each objection requires work in their own right. It shouldn't detract from the conduct of the audit on the time frame that we think. I shouldn't let that be a concern to you. The only thing to note is that all audit work looking into investigations does result in an increased cost to the council.
You broke up, but I think you were stating the obvious, that it will increase the cost.
Very much so.
Thank you. I know that was my specific question for that bit for you, Darren. I don't think anybody else was prepared to ask you a question on our accounts, so I'd like to thank you and wish you a good evening.
Thank you very much.
Right, back to Ola properly.
Hello again.
Sorry, Chairman, can we just be clear for the minutes? Are the objections to the draft accounts or to last year's accounts?
Ola.
It's actually a mixture. Some of them are relating to 22-23, and some items, one of the objections is actually relating to 21-22.
Thank you.
Right, so I'd like to present the report on the statement of accounts, and you have seen the full draft statement, which was published on the council's website. It is a draft, so there may be some changes to it. Even today, Councillor Barnes and Councillor Jason were sending some corrections or asking for some clarifications. So it is still work in progress in a way, and it will be the statement will be examined by auditors. We still don't know when it is going to be exactly audited. We believe it's going to be at some point this month, in October, and Darren Wells said he was hopeful that it was going to be finalised by December. Obviously, that will depend on our resources and the resources on their side, but we'll do our best to actually to progress with it as soon as possible and to keep the timetable. The draft accounts include the annual government statement, which was separately approved, and there are no major changes to the presentation of the accounts. And in terms of the sections of the accounts, there are 4 main sections, and they are followed by a large number of notes. So the main accounts are the CIES, the Comprehensive Income and Expenditure Statement. This is a statement which is an equivalent of a profit and loss account in the private sector, but it looks obviously different because of the nature of the services that we provide. What it shows, the comprehensive income and expenditure statement, what it shows is a deficit on the provision of services of £3 million. That figure is different to what members would have seen in the revenue and capital budget report for 22-23, because it includes a lot of items which are outside of our control. It includes things like, for example, the pensions costs. It includes things like depreciation, the results of revaluation and impairments and things like that. So the £3 million is trying to show us the financial performance for the year is according to the accounting rules. However, it is not exactly the same outcome that you will be seeing in the monitoring reports, and it is not the same as the effect on the council taxpayers. There are a number of adjustments to that figure, and they are in the second part of the statement. That statement is called Movement in Reserves. So if I share my screen, actually. So the movement in reserves statement, just make it bigger, 22, 23. This one starts here with the same £3 million that you could see on the CIS, the Comprehensive Income and Expenditure Statement. This was the figure here, quoted here. So it starts with the same figure, and it basically shows us the movement in the different reserves of. It shows the different movements and shows the different adjustments that are made to that figure to arrive at the figure that actually affects council taxpayers. So you can see £3 million here, which is the deficit on the provision of services. There are then lots of different adjustments, depreciation, impairment, reversals of lots of different transactions which actually happen in the CIS, and which by statute are not supposed to affect council tax amount that is chargeable to taxpayers. What you've got there, after the adjustments, you've got an amount which is 1.5 million, which you may be familiar with, and that 1.5 million is the amount that you would have seen in the revenue and capital monitoring reports for the outturn for 22-23. And that's the amount that we needed to draw from reserves to balance the books. What you will see on the movement in reserve statement as well is that you will see a clear difference between what you've got on the left, which is the general fund reserves, and then you've got capital receipts reserves and capital grants unapplied. Basically, these are all usable reserves. And what you will see further to the right will be unusable reserves. This is really, really important because what you can see is that the usable reserves were 25 million at the beginning of the year, and then they were 28 million at the end of the year. However, when you look at the unusable reserves, these were 65 at the beginning of the year and 92 at the end of the year. That is because the overall value of the council's assets has gone up. However, in its majority, that was because of the unusable reserves. And unusable reserves will be things that we cannot actually use to fund our services. If I actually go back now to, go down and look at the balance sheet, what I was talking about is the total reserves were 65 at the beginning of the year, 92 at the end of the year. However, you've got the split on the balance sheet, which shows you the usable reserves, the general fund reserve, earmarked reserves, and then the capital receipts reserve and capital grants unapplied reserves. So these have gone up by 3 million here. However, there was a huge increase to the unusable reserves, which actually does not help us very much because this is money that theoretically we are in a much better position. However, these are reserves which are unusable. A lot of it is the revaluation reserve, capital adjustment account, and pension reserve, which, as I also mentioned in the report, came from being a liability last year and became an asset at the end of 22-23. So all this section here, 63 million, this is something that we cannot actually use. The real money would actually be in the upper section, which is the usable reserves. Okay. Just go back to my. Sorry, I'll just go back to the report. Right. So. In terms of the pension fund liability, that has changed. The figures have changed. There was a question about whether we will be able to provide the statement of accounts earlier, and whether it's a matter of resources. Yes, the resources would always be welcome, but what you need to bear in mind as well is that, especially at 22-23, and over the last 2 or 3 years, we have had more challenges. So, for example, this year, it was particularly, what particularly delayed us was the pensions. So we prepared the statement based on the evaluation that we received. and we received it probably in May. However, because the LGPS has to do a triennial revaluation of the assets, after about 2 months we received another one, and we had to redo a lot of the statements because of that. So the position may change. Also with the valuations, because there was this ongoing query over Blackfriars, we couldn't actually finalize some of the figures for a long time, and that caused another delay. What also has happened over the last 2 or 3 years, because of COVID, because of the crisis, the inflation and energy crisis, the government has done a lot in terms of providing grants, and reconciliations for these also take time. So there's a lot of more effort that needs to be actually put into the preparation. But resourcing also is an issue, obviously. It's just a combined effect of lots of different things. Apart from the movement in reserves and the balance sheet, we've got also the cash flow statement, which shows the actual flows of money, and it's also it's got its own section, so you can have a look and you can see how money flowed. But I think in terms of the overall position, yes, we are still in a stable position, but that position is deteriorating. So that is a very, very important point. Because last year we did use 1.5 million of reserves to balance the budget because we did not have enough income to actually cover all of our outgoings, and we need to be sure that because we have been doing actually drawing from reserves for the last few years, we have to make sure that we reverse the trend. So we are still stable because we still have got the reserves, but they are depleting, and therefore we need to make sure that any initiatives on savings, they are closely monitored, and that we not only commit to these, but also then make sure that we can actually realize those savings. So it's very, very important, and this year and the following years, that is really, really important, so that we can reverse the trend, hopefully, and top up the reserves again. In terms of the collection fund, there's also the collection fund statement, and the collection fund is showing an overall deficit of 3.6 million, and that is a reduction by almost 500,000 from last year. And this is made up of council tax fund surplus of 2.6 million, and also the business rates deficit of 6.2 million. Now, in terms of what collection fund accounting is very, very complex, and whatever is the deficit, that is not necessarily going to have an effect on this year or 22-23. It will have an effect for 23-24 and then going forward. So in terms of the grants that we were released, that we were providing on NDR, we have been receiving grants, and we have provided relief to businesses, and there was a difference between the two. So what we managed to do in 22-23, we managed to put aside £1 million of that in order to create a business rates volatility reserve in order to smooth the effects of the deficits in future years. What we need to remember as well is that we had a situation with COVID, and in 2021 there were huge reliefs provided, and there was an enormous deficit back then, and the government made sure that this was spread over 3 years. So in 22-23 we still have seen the effects of that. However, in terms of collection fund accounting, it's a kind of, you always have to have a look at 3 years. And what we are seeing in the CIS, in the statement account, we are seeing the budgeted figures. Then there was an actual figure, which we will only have full effects of next year. But for 23-24, we will see the impact on the comprehensive income and expenditure statement of what we forecasted the situation to be for 22-23 back in January 23. So it's very, very, very complex in how it works. There's a mechanism which kind of regulates itself over a period of 2 or 3 years. So the main conclusion really is that we are still stable, but we are really, really depleting our reserves, and that is really crucial that we make sure that reserves can be topped up with firm action on savings and income generation if possible, because we have got savings budgeted, and we need to not only meet those, but we need to also make additional savings in order to make sure that the levels of reserves are sufficient, adequate.
Thank you, Ola. I'm just going to come up with a point myself on something. I just wanted to say, Councillor Barnes and I haven't been going behind your back and changing the figures. We wouldn't know how to change the figures. We have only been suggesting some grammatical and some explanations in the narrative. But I wanted to say I think the narrative is really good. It really helped people who don't know what we've just heard to understand some of it. But I did want to, and I'll remind you that I am a member of Bexhill Town Council. I just wanted to refer to, on page 4 of the narrative, under financial stability, where it talks about some of the identified financial savings were expected to come from the protection of discretionary services strategy involving the leasehold transfer of services, starting with 14 public conveniences to Bexhill-on-Sea Town Council in phase 1. This has not, however, been achieved, as the Town Council has not yet agreed to the terms of the transfer. And I'm just saying, should we really be counting on savings that are nothing to do with us, but rely on the activities of a third party? They could be potential ones that could come up at the end of the year, but to plan savings based on somebody else doing something seems to be setting up for a fall straight away. That's it, really. There's no answer to that. Oh, go on. There is, apparently.
Thank you, Chair. I mean, that was certainly the position of our financial stability plan, but we sort of recognise that actually that was premised on the town and parish councils taking up those services and the income generation being realised. And clearly that strategy is actually not delivered. Our strategy going forward, and this will be set out in the medium-term financial plan, which will be coming to the next Overview and Scrutiny Committee, is to switch that from financial stability to resilience and survival, to be quite honest. So what it really needs to focus on now is actually making sure we're delivering savings, as Ola says. That's what we really need to focus on. That's the action we need to take. And the medium-term financial plan, which will be coming through the committee process shortly, does just that. It sets out a series of actions that we believe we have to take, which involves, reducing some service levels, looking at shared services, and generally making sure we're efficiently run. And we absolutely need to focus on making sure that they are delivered. And I think it's acknowledged that strategy that we had didn't make it. But what we do need to do is complete. We have a discretionary services strategy, protecting discretionary services strategy, which did say if those services couldn't be devolved, then we would look to reduce the levels of service. And so that's what the strategy sets out, and that's what the medium-term financial plan does.
Thank you. It was a better question than I thought. Councillor Barnes.
I've got a number of questions which I don't want to explore at this moment, but give notice that I will explore. I just wanted to say on the narrative, most of the changes were either factual or grammatical. There's one that I think is conceptual, which I'm not sure has been caught, so I will repeat it. It seems to me that we put temporary accommodation under 2 headings. The first, which seems to me mistaken, although the information is useful, is under affordable housing. Temporary accommodation is not affordable housing. It's quite different. So it seems to me that we need to move the temporary accommodation heading up much higher, which actually saves a bit of repetition because we actually, at the top of temporary accommodation, repeat something which is already there under shared housing. So I think there is a bit of drafting to be done there for clarity. Do you want me to pursue my other questions now?
I'll let Councillor Biggs come in with one first.
Yes, I was going to say, hear another voice.
Thank you, Chair. Item 4. When I got elected to the council, I've been told continuously that £5 million is the minimum for the general reserve budget. So I'm quite surprised to see it was let go down to £1 million. That gives me a bit of grave concern over that. Hopefully this won't happen again, and someone should be looking at that. Also, I noticed you took £4 million from the Treasury Investment Reserve to top up the general fund. Does that mean we're now £4 million short in investments?
No. So thank you very much for your question. We have been told that it was a long-standing policy that and that was communicated that we needed £5 million to keep in reserves. And actually, for many, many years, we had 1 million in the accounts for general fund reserve. So because we were talking about £5 million at all times, what we did in 22-23, we actually increased that 1 million to 5 million. And we used, for that reason, we had a deficit for this year, so we wouldn't have had the money to actually get it from this year's surplus because we had a deficit. So what we did is we moved money from one reserve to another reserve. So the reserve that we used was Treasury Management Reserve, and that was money that was building up in the years before COVID, before very low interest rates. So we had it as a reserve to, when it drops, in order to actually be able to support the budget. So the time was that we needed to support the budget. It was actually last year. So we moved 1.5 million from that reserve to actually support the budget. And we had 4 million still. And we thought that it was an earmarked reserve, but we thought to emphasize this message of 5 million, we decided to actually move to top up the 1 million with another 4 to actually have it on the account. It is 5 million, so that it is not going to be used for anything. Because that 1 million and 5 million is staying constant. So whatever we need, we actually top it up in such a way that it is always this constant. So we increased that constant in order to emphasize the 5 million, which is the threshold that we should not go under.
Thank you.
Okay.
Mr. Farmer and then Councillor McCurdy.
I have 3 questions, Chairman. Do you want me to do them one at a time? Because it would be simpler, I guess. So the first one is, I'm used to accounts where the budget is shown and we can see whether we did better or worse than budget. But that's not shown in these accounts. But perhaps you could tell us whether or not the deficit we found, was that better or worse than budget?
The deficit was worse than the budget because we budgeted. Sorry, thank you. We budgeted to take 2.7 or 3 million pounds from the reserves. In the end, we only took 1.5 million. So it was actually a better position than what we thought we would have in the budget.
My second question then is, you've explained about the change in reserves. We took money out of the reserves, the usable reserves, and suddenly we end up with more money in usable reserves, 5 million have moved from, or 5.4 million, I think, has moved from unusable reserves into usable reserves.
No. Sorry. The money that was moved, it wasn't moved from unusable reserves. It was moved between one usable reserve and another usable reserve.
That's not what it says.
Really?
On page 34, you show unusable reserves, 5476, moving to usable reserves, 5476. So that's what it shows.
Which page is it?
Page 34.
34.
Movement in reserves. The third column shows that 5.4 million moved from unusable reserves into usable reserves. I used to call it creative accounting.
Oh yes, but these are just adjustments, so that is not a real movement as such. The movement when we actually moved, this is the adjustment between accounting and funding basis. So these will be things like, for example, within the pension fund, the pension reserve and the revaluation reserve. So these are all adjustments between the accounting and funding basis. These are all the things that we put into the profit and loss account, and they are things that do not affect the council taxpayer, and therefore they are reversed. So it's a very, very something very, very specific to local government. So we put things through the profit and loss, and then we reverse them. So that is basically something that is not really affecting the that change is there so as not to affect the council taxpayer. When I was talking about moving money from the one reserve to another reserve, in terms of supporting the budget, that difference is actually in line with section net increase decrease before transfers to earmarked reserves. That's 1.5 million. So that was the one that was used from the one earmarked reserve. From the earmarked reserve to the budget in order to balance the books. So I'm not making myself clear. So when we are talking about £5.4 million, that is just the accounting adjustments. So that does not affect the council taxpayer.
Well, as what I call creative accounting, possibly. It seems very odd that we're in this position where we take 1.5 million from our reserves because we have made a loss, and yet our usable reserves have gone up. I do not understand how they can have gone up in real terms when we've just taken 1.5 million out of them.
That is because the statutory, we need to account for some statutory items which are put into the profit and loss, but they do not affect the council taxpayer. So we then reverse them, and they are basically accounting entries, nothing more. So it doesn't affect the real people. Whereas what does affect real people are the movements in the usable reserve, and that is going down. So that is something that we need to address. Whereas the unusable reserves are things that we do not have control over. We have to do those adjustments because the code tells us to. And these are not really, it confuses things. But that is because we need to account for things using international financial reporting standards. But in terms of funding arrangements for local government, we have to replace those entries with something else, reverse them. So,
I think you've answered it as best.
I think you've answered it as best you can.
I will not pursue it further.
Duncan might be able to help us. He's put his hand up.
Thank you.
Yeah, thank you, Chair. Thank you, Ola. I think it might help just to direct members. There's another note which might be useful because this is part of the complexity that Darren was talking about earlier, and part of the complexity that Ola has talked about, and part of the complexity about local government accounts full stop, is that we have to follow a series of adjustments for our accounts. We have to treat them initially as if they are private sector accounts, but then we have to make a number of reversals within the accounts so that it doesn't impact on the council taxpayer. But there is a note 10, is specifically about earmarked reserves. So that's on page 60 of the accounts. And hopefully what this will demonstrate is that reduction of reserves. So if members can look at that page 60, you should see an opening balance in March 22 of 17 million. And that reduces over the year down to 7. Now, there is 5 million of that is the general fund reserve balance that Ola has talked about, but that's where you can see the actual usable earmarked revenue reserves that are available to the council. You can see that they're being applied and they are reducing. And coming back to Councillor Biggs's earlier question, it was my recommendation when we put these accounts together that we were clearer and more transparent in terms of that £5 million general fund minimum, because that's the balance you've had as an authority for a number of years, is the 5 million, but we never had it separately identified. We had a bigger, so all of these reserves you can see on this page. So the 7.8 million, the majority of that is within our gift as an authority to hold those reserves and use them as we see fit, as long as we have the decision making to support those. So, for example, you'll see we've got £2 million as at 31st of March 2023 in the medium-term financial strategy reserve. So that's to help smooth the budget. That could be used for invest to save projects and all those sorts of things. But actually, because these are non-statutory, these aren't the unusable reserves, we're able to move them about. So again, just picking up on the point Ola made about the Treasury Investment Reserve, that was a reserve that was established a number of years ago prior to COVID to help support with fluctuations. But you need to use these reserves in the best way you can. And there's no point having a reserve of 5-7 million sat there not doing anything. So it made more sense to remove that reserve, because we're able to do that, put some of that balance into a general fund reserve of 5 million, and then it's very clear that that figure is there and it's a separately held reserve. The other point to make on that reserve specifically, though, is that that's a judgment for your 151 officer every year. As part of setting the budget, I will do a report this year that gives my professional view as to what that reserve should be. So just because it's been 5 million for a number of years doesn't mean to say it will be 5 million this year. I have to look at all the risks the council's facing. I have to look at the medium-term financial position. So that £5 million reserve could be increased this year. It could be reduced. I haven't done that work yet because we're not at that point in the budget. I'll be doing that in February. But hopefully this note, because it removes those the unusable bits and pieces, all those reversals. These are some of the cash reserves we're talking about. And Ola mentioned the business rates volatility reserve, and you can see just before the line that totals everything on that note, you'll see the £1 million that we've put in there. And that does help smooth things like revaluations, bad debts, all those bits and pieces that, again, flow through the collection fund. So hopefully that note is more useful and does demonstrate how those reserves, the usable cash revenue reserves, are reducing. Chair, thank you.
That was very helpful. I think that certainly clarifies it for me and makes it. I have one more point, Chair, then I'll shut up. The cash position looks pretty horrifying, going from 42 million down to 12 million. If it carries on like that, this council will be broke. Could you just explain, Ola, why has it dropped so hugely in 1 year, please?
The reason why it's dropped so hugely was because the balances that we had included a lot of COVID grants money that was still there. There was a lot of money that was pushed our way, and we did our best to actually to pay out to businesses and to support them as much as we could. But there are some balances which basically are COVID grants, which we repaid in 22-23. And also the cash balances are not necessarily balances that all belong to us. There may be balances that we hold because of NNDR and council tax that we then share with preceptors. So the cash balances may fluctuate, but the main reason is because there was a lot of money still in our accounts in our bank accounts that was not ours actually. So the balances were really, really inflated over the last few years.
Thank you. I'll come to Councillor McGirt first and then Councillor Barnes, because I know he wanted to refer to note 10 ages ago, but Councillor McGirt.
I was just going to go back to my previous question, Ola, and it may again be something which you aren't unable to respond about, but I just want to push the question of divestment from the pension fund being divested from fossil fuels. Thanks. And I should have remembered. It's the second time I've asked the question. But if you're not able to give an opinion on this, that's fine. I understand. But given the fact that the pension fund only has to, well, generally speaking, I don't know what the specifics for East Sussex County Council pension fund are, but generally speaking, across the country, we only have to see a return of 1.5% to make the pension fund continue to be viable, and we've seen an increase in its profitability or in its viability. Do you think that divestment would be feasible? Is it something we want to pursue as a council?
Just as Darren couldn't actually answer that question, I'm not able to answer this one. But in general, there are lots of more products out there at the moment that take into consideration the sustainability. Even with our in-house investments, there are some options that we can take. But what we also have to look at is the balance between sustainability and also our financial position. So very often those investments may actually bring a lower yield. So we need to actually negotiate between bearing the lower yield and achieving sustainable outcomes. So it is something that we do ask about, and it's a balance we need to try to achieve. We will always look for investments, and we always ask about sustainability. Be it the portfolio that we have with pooled investment funds, and also with our bankers as well. But in terms of our financial position, we need to make sure that we do not forgo the benefits of higher interest. So we need to balance it, and it's a decision that we need to make sometimes to actually make sure that in order to achieve sustainability or achieve better outcomes for the planet, we may need to actually forgo some of the yield. So it's a decision that we need to make, all members can make.
Thank you, well, I really appreciate that view. And I just, I know we're not making statements in this committee, but I think given the information about the ability of the audit to realistically audit our impact on climate that Richard asked about before, and the performance of the pension fund, I wonder if this is something we can address as a whole in future and really be more ambitious about our ability to audit realistically across the board our impact on climate, and to really be ambitious about moving that forward.
I was going to suggest specifically on the pensions question that you've asked twice, perhaps the third way of getting it and getting an answer would be to approach Democratic Services with our training programme and our briefing programme and ask someone from East Sussex Pension Fund to come and address members.
If we could do that, I think that would be really positive. I would very much welcome that.
You missed that, less of the we, that was you. Councillor Barnes.
Thank you, Chairman. You preempted one of my suggestions. Indeed, it might be quite helpful if members saw the annual report of the Pension Fund, which is, of course, a body independent from the County Council. It's under trustees and takes advice. But the annual report will address the sort of questions that we're asking. But yes, to have somebody come along and actually explain their policy would be quite sensible. I really think what I think is very important for members to grasp, particularly new members, is that the way local government accounts are presented doesn't really tell you the true position in terms of what is available to support revenue, as opposed to capital or other kinds of things that you keep usable reserves for. The unusable reserves are no-go area totally. Some of those other reserves will be used for the particular areas for which they're earmarked. But fundamentally, the figure that we get in the forward look on reserves is the one to focus your mind on. And I wanted really, in a sense, also to draw attention to paragraph 4, which is really the major problem we face, which is the gap between our actual expenditure each year and our income is 3 million. We had a fortunate year by the way things have turned out. We didn't actually need to meet all that gap this year, but we've budgeted for meeting at least 2 million of that gap in the current budget. But we also budgeted for 1 million savings in the what is now, I think, going to be the resilience rather than the stability fund. In other words, the 3 million were going to be met by changes in our practice. And so that 3 million figure is the one that really faces us. And Ola will confirm, I think, that the reserves which really we are forecasting that we could use are getting down to about the 7.5 million mark, which really means that next year's budget is going to be a major headache unless we actually deliver savings this year. And I think that's the meaning of paragraph 4, and it's probably the single most important paragraph in the covering statement. I think actually I've said enough, but I do think we need to be careful about this figure of 28 million, which is an accounting presentation in accordance with local government rules and not actually the reality that we face on the ground.
Thank you, Councillor Barnes. Now, I took Mr. Farmer's comments about creative accountancy, but correct creative accountancy, legal creative accountancy, which is incredible. Councillor Thomas.
I just want to say, first of all, just how helpful the answers given by Ola and Duncan have been. It's really good when we get that degree of background information. It really does clarify. So thank you both very much indeed. Just a simple actual question. What is a capital grant reserve? I don't know what it is. Good to see it's up by 4 million. I presume it's an unusable reserve. It's just, and also, why has it gone up like that? Is that a one-off? Is it a trend? What is it, please?
Capital grants reserves, these will be grants that we receive, for example, for things like SIL, for example, would be a capital or contribution to the reserve. So if it goes up, it may be because we received more SIL in a year, which we haven't actually used. And there will be grants, for example, things like if we received money, mainly SIL, but also, for example, the Blackfriars grant that we received from Homes England as well. So these would actually go there if unspent.
trend? Is the SIL money going up? Is there a reason why it hasn't been spent, please?
In terms of SIL, there is obviously we receive money when projects get to a certain stage, and there is a kind of a payment plan. So we receive these monies, and then there's a SIL board panel, which then decides how to spend this money. So it all depends. It will not always be money coming in and going out at the same time. But there is for SIL, for example, there is a schedule, and there are projects which have been actually outlined. Some of them will benefit RODE or for example, parishes as well. And some of this expenditure is actually entered onto the capital programme. And it will happen. If not this year, then maybe in 24, 25 or 25, 26. So there isn't a trend as such. It depends on how what we receive and what we hold, and we have not yet spent or recognised. Yes, yes. Yeah, that one is usable, yes.
Thank you. There's a clear message, which is we've got to reverse the trend of relying on reserves to balance the budget, and savings have got to be found somewhere, not through a stability programme, but through a what programme? Resilience programme. Yeah. Can I just say, just for members, I was amazed talking to Ola and Duncan that every day we move funds from accounts to a better account to get a better rate of interest overnight, and then the next day we move it back again. It's nonsensical, but they have to do it, and it is earning us money. But what a drain on resources. But there we go. Thank you. Any other questions? Oh, Councillor Thomas. Sorry? Audit. Thank you. Anything else on this one? Because I think it is just that we note them. Yeah. Okay, thank you. That's noted. Right. Agenda item 7, the internal audit report to the 30th of June. And this is Gary Angel, our internal audit manager. Gary.
Thank you, Chair. Good evening, all. You can hear me all right?
Very loud and clear.
Thank you. Very brief report from me tonight, by my standards. It's a report to update members on the first quarter of 2023-24 and the progress made on implementing the outstanding audit recommendations. That's pretty much what it covers. We issued 3 reports in the first quarter of 2023-24. And as usual, the executive summary is in Appendix A, which is on page 23 onwards. The audits issued were debtors, ICT governance and risk management. All received a substantial assurance rating because no significant areas of concern were identified. Then just leaves me with the implementation of the audit recommendations. I've been around and chased everyone up to find out what progress has been made. We can get rid of any of these. The progress on the outstanding audit recommendations is shown in Appendix B, which is on page 29. In summary, the number of old year recommendations is now reduced from 7 to 5, and good progress continues to be made on the recommendations made in the last financial year. I think that's all I'm going to say. Happy to take any questions.
Thank you. Just before we get any questions, I'm going to say a few things, actually. The ICT governance audit would, of course, have been fully met had it not been for the outstanding recommendation from 2018. I know some progress has been made in that, and that is why actually Mark Adams, our digital and customer services manager, is here to update us on particularly those 2 outstanding items, the ICT disaster recovery plan and the data protection. Mark.
Thank you, Chair. Yes, I'd just like to update the committee in relation to these. The disaster recovery plan is almost 80% complete, so it's coming along. I think there's been a bit of reluctance to have a lot of this critical information in one document. But I'd like to give reassurance that we do have a recovery plan, particularly for critical events, such as power outages, cyber phishing, ransomware attacks. So it's just coming together. Like I say, it's almost there, but I'd like to give reassurance that there is a plan in place and it is moving along. In terms of some of the work and the background work that has been going on behind the scenes, the infrastructure team, led by Graham, have been adopting a cloud-first strategy. So this is moving our, core servers and backup to the cloud. And we've got an impending move to our data centre, which will give much more business resilience and it will reduce our reliance on the town hall as a physical building. So that's the update on the disaster recovery side. In relation to the other action point, which is to do the special character data, I can confirm that we have collated all the responses from the departments and then identified areas where our special character data is held and the suitable justification for this. And we're just in the process of updating our policy and issuing and the process, and it's pending sign-off from Graham McCullum, who's the lead officer, and this includes updating or if there's an assessment for privacy notices.
Thank you, Mark. Just to explain to members, that bit was because I actually contacted Mark separately and said, are we in danger of being told off by the Information Commissioner by not having this? So that work is being done. And I know that's not as old as the other ones, but it's nice that it's being done. Before I come to it, let me carry on while I'm on a roll. The procurement SLA, although the important is the asterisk that says it's still being managed by Duncan Ellis. So Ola's got a letter. This is from 2018. I'm concerned that this lack of agreement on the procurement SLA is putting possibly rather at risk across all sorts of other areas because we haven't got the procurement SLA. It seems that the problem lies outside of Rother District Council. So I'm hoping to arrange a meeting with Councillor Barnes and myself and Duncan after this meeting to see if it is an isolated problem or a general one and what this committee can do to actually assist in moving it forward. Because I don't think the problem's at our end, but somebody might need gentle movement. I'll just do another general one on the, if you look at the last year's audit recommendations, very reassuring to see the progress on those. And I do think it reflects the SLT's commitment to the process. And it's nice to see. Is there anyone with any questions on the audit? Yes, Councillor Thompson.
Thank you. Sorry, Chair. The first one was, what was the procurement recommendation?
Gary, you've got the longest memory in the building. Well, out of the building online.
What was the procurement recommendation?
What was the recommendation for the procurement? It was just to agree as SLA, wasn't it? Just simply.
Yeah, it was. Yeah, I can't remember. I can't remember the exact wording, but the number of it was we ain't got an SLA. We need to agree one.
Yeah, because I remember when I was first elected, we had a presentation in this very room from procurement saying it was all singing, all dancing, and we just needed to sign up to it. And here we are. Well, that was before I was elected, so here we are, still waiting for it. So, yeah, it is just to have an SLA.
Don't understand is, if that's what it's about, why does it make a difference what you call the heading it comes under?
What heading? Sorry.
In the report, it looks like it's either an SLA or, and I've forgotten what the other term is, it's some kind of agreement between authorities, isn't it? That those two. If the procurement recommendation stands in its own right, what difference does it make what heading it comes under? Surely it's a good idea to do it, whether you call it an SLA or whether you call it the other thing. I don't see why that change makes a difference. I'm puzzled.
no less puzzled than I am at your question, but Lorna will attempt to
Thanks,
answer.
Chair. I can't explain it other than the fact that that is the advice that we've had from the Wielden legal team, and they feel that's a better way of describing the agreement that we have, and it's an inter-authority agreement rather than an SLA, a service level agreement.
Councillor Barnes.
Yes, what I don't understand is I just about understand what Wielden Legal Services are saying. But if this is being resisted by East Sussex, why are we insistent on following the advice from Wielden? Because it's only that it's better, not that the SLA is unworkable. And I would have thought we need to get on with it.
That was an I agree from Lorna. Councillor McGurk.
I'm sorry.
So just ahead of you, Councillor Thomas.
Just to comment, having been involved in some legal negotiations around partnership agreements, Section 75 agreements, service level agreements, I can remember probably 18 iterations of a partnership agreement, and it's probably just legal colleagues being defensible and making sure that that the I's are dotted and the T's are crossed. So I would be more inclined, having been through a similar process in the past, it can be tortuous, and it's probably just different legal mechanisms and vehicles for very similar things.
I suppose the observation is at least we have carried on procuring things. We haven't had to not do anything for 6 years while they make their minds up. Did you have a comment, a question, Councillor Thomas?
Second question is different. And it's something which, again, it puzzles me. And that is, if we look about Appendix A and the debtors audit, now there we're saying that the overall level of assurance is substantial. But when we look at the 4 different categories, which are shown about halfway up the page, 2 of those are partial and 2 of those are complete. But if you look at the ones that are partial, you would think they would have a knock-on effect on the ones that are complete. So if you follow that through, I don't see why, if 2 of them are partial and those 2 have a knock-on effect on the other 2, why the overall verdict is that it's substantial. And again, puzzled.
Mr. Angel.
Yes. Well, this is a borderline decision. This one. The second one, which told about the supervisory checks weren't being carried out for a period when the manager was off sick. We didn't mark that down too severely because we couldn't actually find anything had been wrong because of it. It's just a check that should have been done to give management assurance everything was all right, but we couldn't find anything wrong there. So that wasn't as severe as perhaps it looks. And the manager concerned is now back and doing the checks, I believe. The first one about the communication, yes, I mean that could have consequences, but it was a. I had to make a balanced decision on this one. Overall, I thought things were going okay, but so you can have a few things that fall down and still get substantial. There wasn't any high-risk recommendations in the audit, which would automatically make it limited or minimal. So, I mean, it's just, you get these little things that look a bit odd sometimes, but I'm trying to consistently apply our approach. We've got, there is a table, perhaps I ought to circulate with members again at some point, which I think I do it every year, which says how we get to the assurance ratings that I do. And that tells you like how many medium risk or how many high risks a certain category to have before it to be made a negative assurance rating. But it does come to a bit of a judgment call sometimes, and sometimes I have to consider on balance how good or bad is it operating, and this is what rightly or wrongly this is what I decided it was substantial in this one.
Thank you, Gary. Councillor Thomas.
I understand that, and that's a good answer. But it does show that the process is a bit more subjective than you might think it is. Because if you're saying the debt collection performance is monitored, you're only partially sure about that. You're only partially sure that debtor invoices are promptly and correctly raised or all sums owing to the council. I think it's difficult to say how you can be completely sure that direct debit income is collected on time and refunds and write-offs are properly authorised. It does, I think, suggest that it's quite a, it's a subjective process on occasions when it's marginal like this. But I thank you for the answer.
And Gary, can I ask?
So, Chair, can I just add? I mean, yeah, it is nuanced, and I try to be as consistent as I can be between audits and fair to all our auditees. So, I think that's all I say, really. Thank you.
Thank you. Could you send that out to members, please? Don't wait for the next meeting or something. If you send that explanation.
Yeah, certainly. Yeah,
out to
certainly.
members, please. Thank you. Anything on audits? I think this was for noting again, wasn't it? Yes, Councillor Barnes.
I found Gary used to put something in our reports about where he was going next, and then he left that out. He circulated that again. While I wouldn't want it at every meeting, I think it is helpful to have periodically, if Gary could give some thought about when it would be best to circulate that.
It's funny you should say that, because I emailed Gary this week about what had happened to it. Mainly because going forward, I want to somehow build into Gary's timetable a space where this committee can say, we want you to go and look at something for us. And if it's always full up, we can never do that. So going forward, but yes, so that's three of us have missed it, Gary. Can we have
sorry, can I just add then, Chair?
Yeah.
I mean, I did circulate the audits in progress and audits to be done soon to all of you prior to this meeting, and I can maybe do a more abridged version of that in future reports if that's what members want. As for capacity for other audits, well, the audit plan is always fully subscribed. If anything, we're running behind at the moment, and we will struggle to achieve all the plan. But I will update members of the next committee how things are going there. I think you've always got to bear in mind if you want the auditors to look at something, someone's going to have to go, someone's going to have to give, someone's going to have to be dropped from the plan, because I don't mind team twiddling their thumbs during the year. I'll probably put more on them than what they can do in a year, and so it's always they're fully subscribed to audit work during the year. So just wanted to make it clear to members that if you want something looked at instead, it's going to be at the cost of something else coming out. So just something to bear in mind.
Yeah, thank you, Gary. Accept that, and I don't think anything would come up without some sort of warning and discussions with Lorna and with various other people, that we would know there's a problem with something, and in fact Lorna might beat us to it by saying, Gary, drop that and go and look at this, because a lot of yours are on a schedule as opposed to need to be done or should have to be done because there's a query over it. I know there's been references before, but it's just the ability for us to slip something in if it really needs doing. I mean, let's face it, yes. You have slipped in Blackfriars and the housing company, which 2 years ago wasn't on your plan, I'm sure. So that's all it is, Gary. It's not a big deal.
Yeah, just to spot that point. I mean, they were programmed in the Blackfriars and the housing company. There wasn't done in the year they came out, but they were programmed in for the following year, hoping that more progress had happened on them, we'd have more to audit. But yeah, I mean, the second half of the year, which we're just coming into now, that is a better time for us to look to drop something, because we're largely doing the governance audits in the last 2 quarters of the year, and they're, as you say, the ones we do every year to a greater or lesser extent. We do reduce the coverage sometimes to get through them all, but they are, you could say, they're done to death. So it probably wouldn't be the end of the world if one of those was dropped or greatly reduced. So that's about the best flexibility I can give, really.
Yeah, thank you, Gary. I said we're not expecting anything to come up, but we need that ability to be able to slot one in if it's become an issue. Thank you, Gary. So this is again noting. Oh, sorry. Were there any other questions for Gary first? Yes, Mr. Farmer. Sorry, Gary.
Sorry, Chair. I'm just a little confused. I think Gary said he'd circulated some information to the committee outside of the meeting.
I think prior to, I haven't had it because I didn't look at my emails before I came out.
It's just
Sorry, can I just say apologies to Patrick Farmer? I didn't include you in the circulation, so I'll send you a copy pronto.
Well, I was going to say it seems to be a general issue. I don't know whether the Secretariat can sort it out. Because I'm not a councillor, information sometimes sent to this committee doesn't seem to get to me. And I didn't know if there was some way...
Yes, apologies, guilty is charged.
And I plead guilty to that, as you know, on several occasions when you just get an isolated email from me, because I've forgotten to include you in the original one. But yes, I mean, you are a member of this committee, but yeah, because you're not a councillor, you're not on the easy button on the email.
Well, if anyone's missing my email address, I can send it to you.
Thank you. Thank you, Gary. Right. Yeah. Don't advertise your email address to people. Thank you. So that's noted, yes? I thought nodded heads. Thank you. So agenda item 8, which is, I think, the Treasury Management update. Ola, you or? Yes, you. Thank you.
The Treasury Management update is a report which tells us the position that we are in terms of our Treasury Management activities. We are bound by regulation to be compliant with the rules, with the Prudential Code and Code of Practice on Treasury Management. So this report is to let you know that we have complied with that code, and we complied with our own set Treasury Management strategy. In terms of the financial investments review, as of the end of the first quarter, we had around £22.5 million invested, and 14.5 of that was in short-term call accounts. The rest of it, the 8 million, was invested in property funds, CCLA and Hermes. They are property funds which give us interest every quarter, and also they may go up or down in value. We were in the last probably 10 months in a climate of rising interest rates. As you know, last week the rates were not, Bank of England rates were not increased. However, over the last 10 months, we have been enjoying higher interest rates than we thought we would be. And that resulted in increases to our interest receivable. So as of quarter one, we received interest, or predicted to have received interest of £232,000, and that included the income generated by the property funds. The budget for the year is 586,000, which meant that at this point we received or benefited from achieved 39% of it. That puts us in a good position to meet the budget, and we believe that we are actually going to exceed it. Up to at the moment, the forecast is that we would be achieving 710,000 more than at year end than we predicted. That is because of a combination, obviously, rising interest rates, but also we have become a bit more active in terms of placing money and moving it around a bit more. We are exploring MMFs, money market funds. I must say that we haven't invested anything yet in those, but we are still in the process of opening those. And we are trying to get the benefit of what products there are at the moment on the market. Unfortunately, the banks have, in the climate of rising rates, the banks decided to make it a bit more difficult for us. Whereas previously we were getting nice interest rates on on all of the money that we had in our, with our main banker, Lloyds. However, this rate has now dropped to 190 because what we are required to do is every single day to actually get any excess money that we got over and above zero threshold. We are encouraged to actually put it in a different account with a much higher rate. So that's what we are doing. So every single day, even though we have always done this, we have always checked our balances every single day. Now we actually have to make another step, and in order to actually get a better interest, like 514 rather than 190, we actually have to send an email, then report it on our spreadsheet in order to actually get that interest. So the banks have become, well, they put some hurdles, hoping that we would not bother moving this money around. So that's what we are doing at the moment. Obviously, it's taking the resources, but we are trying to do our best in that area. We were also holding on to money in call accounts and notice accounts, and we didn't place any money into. Well, we didn't put a lot of money into short-term deposits, like term deposits, because we were in a climate of rising interest rates, so we wanted to hold it off. Now that we know that the rate has not gone up, so we can actually put some money aside for 3 months and get a slightly higher interest than we get on call accounts and notice accounts. What needs to be pointed out is that 710,000 excess income from investments, that includes around £200,000 of accrued estimated income from the housing company. So that is not actual cash that we will be receiving. It will only be realized when actually the housing company is going to be paying off the loan that we provided to them. So that is this could be potentially a risk. It's not cash, but it is something that is being accrued. There are some risks to the forecast. The 710 is actually helping us towards our budget deficit. It is something that is helping us this is income generation part. So the more we get in here, the less we need to generate in savings. However, our situation with the budget is such that we need to actually get as much as we can in terms of income generation and savings as well. So it is helping us towards balancing the books, but the caveat is that there is a risk that the prediction may not be entirely correct. There are different things that may affect it. Obviously, the Bank of England rate, and products that are available to us from the banking sector, but also things like, for example, level of funds that are available to us, and that may be dependent on the capital program and how soon we are going to be spending money on capital projects. Mr. Farmer asked previously why the balances on cash have been dropping down. So obviously, the more cash we've got, the more we've got to play with, and we could be getting more. One of the other reasons, which I actually failed to mention previously, was that a lot of the capital program items that we have been financing, we actually used internal borrowing, which meant basically that rather than going out and in the climate of rising loan rates, we have not been borrowing money to actually pay for the capital program items. We have been using up our own cash balances. So depending on how quickly we move with some capital projects, we may have different levels of cash to actually invest in, and that may affect also the interest receivable that we may be getting. In terms of the borrowing, we are, because we have not moved with the capital program as much as we predicted, we are very much within the limits of the borrowing that we set out as a kind of the top level that we could have. So we are comfortably below that limit. And as I said, we have been borrowing internally, using up our balances, rather than taking up new loans, which are at the moment at a quite high level, 5.6%. So that's something that is we have to bear in mind for our revenue budget later on in terms of interest payments. So we try to do as much as we can to actually use our own resources rather than borrow. There are also non-treasury investments that we've got, non-PIS and PIS investments. So these are different properties that we get income from. We get return on investment after notional interest applied of 5.26 on non-PIS projects and properties, and 3.33 on those that come up under the umbrella of property investment strategy. In terms of the economic outlook, this obviously was updated in September, but things have changed since. Now we know that the inflation has gone down slightly, and that's why we didn't have another increase in Bank of England interest rates. However, this should not really affect our prediction, because it was still based on what we on the balance, sorry, on the interest rate, Bank of England interest rate that was there in place. The small movements in the interest rate were not really going to make a huge difference in terms of the forecast, overall forecast. So there's more volatility in terms of cash balances available to us. Other issues, things that we need to remember about is that the value of investments in property funds has been stable over the last financial year. However, and we get £300,000 a year, more or less, from CCL and Hermes. However, what we need to also bear in mind is that the value of the funds may go up or down. So last year, for example, at the end of 21-22, we had 1.3 million more in value than we originally invested. However, that has changed at the end of 22-23. And I did talk about some of those strange adjustments and the creative accounting that is happening in local government. So some of those adjustments benefit us. So, for example, if the value of the funds that we have, long-term investments that we have in the portfolio of property funds, if that goes down, we have to reflect it on the balance sheet. However, it does not affect the council taxpayer, because we then reverse that possible fall. This is something that we have been allowed to do because the government provided us with something called statutory override of IFRS 9 financial standard, and that meant that if there is a fluctuation in the value, it does not affect the council taxpayer. However, that override was extended up to the 31st of March 2025, and after that point, any fluctuations will actually not be able to be reversed, and they may well affect the council taxpayer. So we need to start thinking of maybe building up another reserve to actually smooth these fluctuations. So that's why the savings program is so important, because yes, this year we are going to get an excess amount of money from investments, but it would be nice if, rather than propping up the budget, we would be able to actually put it aside for when we may need it in the future. That override is going to expire at the end of 24-25, and there is a general feeling that it will not be then extended any further. So, so that is something that we have to bear in mind and be prepared for. It may go up or down, obviously, the value, but but we need to be prudent and start putting some money aside in order to actually smooth the fluctuations in the values.
Thank you. Councillor Barnes.
Yes, to begin with Ola's last point, I certainly think obviously the fluctuation in the value doesn't really matter very much so long as we're not forced to sell. But because of the possibility that we might be forced to sell, I think it would be sensible to actually recommend from Audit that we do start building a small reserve up, at least to mitigate that. I think it would be prudent practice. I'm a little worried about including the interest accruing on the housing company loan being treated as income. I don't want to. I mean, it looks like a very creative way of actually turning capital into revenue, which you're actually not supposed to do. So I wonder if actually that revenue shouldn't be turned back into capital, PDQ, because at the moment treating it as income, and it's not real because of course the housing company at the moment is not generating any income yet. So anything that they expend, which is called income, will actually be met out of our capital funds. And until the company makes a profit, that is going on to be the case. So I think that one worries me, that it's in a forecast figure, even if the caution is there in the small print, because I certainly wouldn't want to count it towards the likely deficit next year. Interest rates, core inflation is down even more radically than the headline figure. So I think interest rates are likely now to stabilise. The real question is going to be when they start falling. And again, I think we need to build that into our prudential qualifications. But I do congratulate, and I do think Duncan and Ola deserve our congratulations on the way they have made much more active use of the money passing through our hands and the income that this has generated, which is really enormously to the benefit of our people whom we're serving in the community. It's a good step towards preserving services which we might otherwise have to sacrifice. So I think if something could be minuted along those lines, I think this is a very welcome development, and congratulations are in order.
Yes, indeed. Thank you.
Thank you.
On your point about the 2,000, sorry, it was 200,000, wasn't it? So on the, yes, so people who were going, yeah, we've got 710, suddenly got, no, you haven't. So we could just raise the question, is there a better way of showing that? So that it doesn't look like we're getting it anytime soon. Thank you. Any other questions for Ola? No, okay, well this is, guess what, it's for noting. We note it? Thank you. Oh, sorry.
Chairman, can we recommend, though, that the question of an earmark reserve against fluctuations in value is at least explored?
Yes, indeed. Yes. Second for that? Thank you. Vote on that, please, about creating the... Yeah. That's carried. That's carried. Thank you, and obviously in passing it was noted. Thank you. Right, agenda item 9, the risk management update. So I'll just explain on this one before I ask Anna to produce it. So we are being asked to note the overall report, but paragraphs 4 to 10 are relative to policy, and we do not make policy, that is the full council. So those paragraphs are for us to recommend or otherwise that they are adopted by full council. And obviously the other paragraphs about the risk register we can chat amongst ourselves, but it's specifically we're asked to recommend the changes mentioned in 9 to full council. So Anna, thank you.
Thank you. So this report is the position update on risk management processes and the key strategic risks facing the council. I'm now responsible for coordinating risks, so Gary Angel isn't, and there's something in the report a bit later on that Lorna will authorise with her delegated authority that change. So as you know, last year the risk management policy was adopted, and the policy needs to be reviewed and updated if necessary every year. And there are a couple of recommendations for full council in my report. So part of the risk policy relates to the risk appetite and the score and the statements. So there is one in particular, which is the environmental climate change risk appetite. Now that one is currently rated as minimal low risk with a target score of 3 to 4. Now that target score has been consistently exceeded since the policy was approved last year, and it feels too low. So the recommendation or the proposal is to amend this to low-medium risk with a target score of 3 to 10. So that's the first one. Consequently, if you change the risk score, you also need to change the risk appetite statement. And in paragraph 8, I've recommended that you keep the statement as it is, but just add where I've put in italics and to be open to innovation and initiatives which are proven to work. So that's that change. And I've already mentioned the slight change to the responsibility and reporting section, and that is from Gary Angel to me as the risk coordinator. So if you're okay, we'll move on to the corporate risk register. I've made no changes to the way that the corporate risk register is presented. Several existing risks have been amended, as you'll see from the register, and I've put in the far right-hand column where the scores have gone up or down, or if there have been any amendments. But I wanted to bring to your attention a few most notable changes. So on risk 4, which is economic and financial, failure to operate within a sustainable budget, this has increased from 12 to 20, and you'll notice that it exceeds the risk appetite, and this reflects the financial pressures facing the council. Risk 11, which is political, the national fuel shortage, that's to be de-escalated, but we'll monitor it as we go along. And risk 14, partnership and contractual, failure of a neighbouring authority or partner, this risk score has increased from 9 to 12 and reflects the problems facing one of our close neighbour authorities. You will also notice that 2 new risks have been added, and they are at numbers 17 and 18, and they both refer to partner organisations. I've put a bit in there about the service-based risk registers. So we're very much reviewing the service-based risk registers, and they are reviewed when we have internal performance boards. And I'm happy to take questions.
Councillor McGurk.
Thanks. And it's really, risk always sounds like a dry subject, but when you see it like this in this table, actually it's really interesting because it's very real. And in the risk register, number 12, environmental climate change, so I'm on a bit of a roll tonight with this, so I may as well stay with it. I am thinking of, I'm just wondering, you know, how widely we gathered information in relation to that risk. I'm thinking specifically of some of the information I was recently hearing about from the Rye Resilience Plan, Rye Sustainable Living Forum, and Colonel Anthony Kimber, who's someone locally in Rye who's done a lot of work on the resilience plan and town plan in Rye. I think I've got the titles right of what those plans are. But there's a lot of detailed information there, including about climate change and the impact of rising sea levels, which, you know, is becoming real. The Environment Agency are already doing some mitigation, some quite extensive mitigation on the eastern bank of the River Rother. So I'm just wondering how much information fed into that, and if there was any consultation and conversations with local town and parish councils.
Well, we tend to get the information from our experts, which is Lucy Bolton and Elise. I'm not sure specifically how much they tap into the town and parish councils and any partner organisations, but I imagine they do tend to take quite a comprehensive view.
I'm just thinking how we could get an answer to that. In between times, you know, I'm just thinking, I suppose it's a question for Anna to reassure herself that it was done.
I mean, it's just that it's a useful resource. So maybe it's just to note that if that hasn't been looked at, that if it could be in future and used, if it's useful. But I'm sure that, you know, our officers have been diligent and done it. You know, it seems it's very clear. It's just something that occurred to me reading it.
Can definitely find out.
Thank you. Councillor Barnes.
Yes, I certainly think we ought to ask that one is reviewed, because it mentions nothing about floods, and we also know that the Environmental Agency is doing a lot of work on sea defences, given the likelihood of storms. The sea levels is an obvious ongoing problem, but what we're getting are much more severe storms, and that could actually overwhelm certain parts of our low-lying areas. So I think that one is very sensible to be reviewed.
Can I just stop you there one minute? I think that's a very good idea, and I'll put that in a moment to a vote that we actually ask for that to be reviewed. But carry on, sorry.
Yes, it wasn't the only one I was going to ask that we take a long, hard look at. In some ways, it seems to me slightly odd that the only red recommendation is buried away at 4. I just wonder about the ordering, whether the higher risk shouldn't be towards the top of the list, rather than simply in some kind of historic order. But the one I really wanted to focus on is risk 2, which mixes up two things very unhelpfully. One is our temporary housing, and because of the activities of Optivo and other registered providers, we are meeting our affordable housing targets. In other words, the risk on that one is falling away. But at the same time, we are facing a homelessness crisis, which is causing acute budgetary pressures, and means that housing list reduction is virtually non-existent. And so that one is moving up sharply towards red, whereas the other one in 1 is moving sharply downwards at the moment. So I think we do need to split that risk into two quite different ones. It just may be that the affordable housing one could now revert to a departmental risk rather than a council risk. Although the council risk remains that our housing totals are well short of our housing need. So in a way, I think the whole of that risk needs to be reviewed with a view to breaking into three quite separate segments, one of which, to my mind, has ceased to be a problem, one of which remains a problem, though not one we can do much about, and the homelessness one, which is where we can do an awful lot to mitigate the risks, and indeed have already done something. But it seems to me to lump all those together as one risk is really to misstate the problem.
Thank you. Mr. Hook.
Yeah, I think I just wanted to take the opportunity really to suggest that I think one of the key issues that we've often had is that we've had a target for supply of affordable homes. That target is nowhere near the level of need that's presented within the authority area. So I think whilst we may have been meeting our objective, we've said we want to deliver 50 affordable homes this year, we've delivered 50 affordable homes, aren't we great? The fact that we need 3,500 affordable homes seems to be getting overlooked. I think there is a direct relationship between the increased number on our housing list and the increased numbers of families in temporary accommodation and the lack of affordable homes, particularly in terms of affordable rented homes coming forward, but also particularly in terms of shared ownership options which take people out of the private rented sector, releasing capacity within that sector to take more people. So I think you're right. I think I do want to disassociate the 5-year housing land supply because I think that's a planning issue and that doesn't really impact in terms of need. But I do think that maybe we have a better worded risk that identifies that link between lack of affordable homes and the increasing in homelessness, which might be an outcome and effect rather than necessarily a risk.
I wouldn't disagree, Chair. It seems to me this is a huge area, and lumping it all together really doesn't do justice to the quite different problems and the quite different approaches that we need to take. I can think of other aspects, but again, I wouldn't want to get... shared ownership is a partial answer, but actually we look at the income levels and a substantial proportion, perhaps as much as a half, maybe even higher, of the families in this area couldn't afford to actually buy a share in shared ownership. And that is a major problem, which again we haven't identified. So it seems to me there are a number of things that have got historically lumped together, which we need to disaggregate and really look at them quite separately. There are one or two other risks which, quite frankly, I wonder whether they're really real. We put number one, political change, as if the general election is going to change very much. It's not. The economic problems that we face as a country and the rising numbers of older people are not going to go away. And so whether this is a huge impact on us, I just wonder whether it's important enough to put that high, and the likelihood of change. I mean, we're bumbling on. We're not actually likely to face disaster, but we're not going to face easy solutions in the next 5 years.
Thank you. Also
maybe the next decade.
Also on that one, of course, the assumption is that a change will have a negative impact. I mean, it doesn't follow. But I've got a feeling that the new girl on the block will be working through these, having just got responsibility for it. But we will single out at the moment 2 and 12 for specific. I just wanted to make mention 14, and Anna refers to it in her narrative anyway, of the failings of a partner or neighbouring authority. And I'm just wondering, we've upped the risk, but should we be doing more around the active looking at a potential problem with that. That's all.
I support you on that, Chairman, because it seems to me what we don't explore is what actually is the detailed impact of a partner going down. And we know this is now, well, Eastbourne has already gone, and we know that another is likely to go.
Yes, indeed.
And so it seems to me it's time we explored what actually this does involve for us.
Lorna.
Thanks, Chair. We agree, actually, as a senior leadership team, that this is one that I think we need to get behind, because it's actually really complicated. It's not just the big contract, it's all sorts of small ways that we work together. So we're going to take this as a specific item to our corporate management team, which is the broader managers across the council and heads of service, and really unpack this and really consider this in some depth, just where the tentacles of that shared work really goes. But we need to recognise as well that it creates an opportunity, with councils needing to find, like we do in our financial resilience plan, shared services is a solution to some of these problems, and it presents an opportunity as well as a risk. And we need to be going into these things with our eyes wide open. But we do think we need to do some additional work on this one, and we're going to do that. I did just want to make a broader point about the way that we're using this corporate risk register now. And I'm not really thinking about the ones that we need to look at in a kind of systematic way. This is very much now part of the way that we're thinking as a senior leadership team. And when something comes up, we're thinking, right, do we need to go back and have a look at our corporate risk register? And it's really working for us in that way. And it's becoming a really dynamic and live document in a way that I don't think it has before. And I think that's a big step forward.
Can I say, I think that's reflected in the fact that Anna's in post. Councillor McDowell.
Sorry, I need to go to catch my train, so
that's all right. Can I come with you?
To be excused. Can I ask to be excused?
No, that's fine. I think we're almost at the end, except for Councillor Biggs is determined to keep us here. Councillor Biggs.
Thank you, Chair. It's number 18, actually. Quite interested to see this one put on. It talks about the legal clarity of RDC's legal position and their specific legal advice and interpretation. I've been waiting 2 months to get a legal answer, if you like, to a question I asked. I see Ben smiling. So obviously, I just wondered how do we go and move forward with this? Because obviously I've been waiting 2 months for an answer for one question. Is this the legal team? Does that become your problem? Or what happens there? I wasn't going to mention anybody's name, but you started smiling. So.
Well, Ben just said I was expecting this.
With this one, we've got a few avenues open to us. The monitoring officer is probably the first place that we would look to get this clarified. We do take external legal advice as well, but obviously it's quite a new area for us in terms of our governance responsibilities in relation to the housing company. And the reason it's on here is because questions have been asked, and we have a new chief executive, and I think everybody needs to be completely comfortable, or as comfortable as you possibly can be, with the delegations and all the governance arrangements.
Thank you. I think we've moved forward. Obviously now we've got the 2 new directors on board, so things would move forward. It's just one question that I was after, that was all.
I think you can take pride in the fact that your question obviously ended up as this being added as 18.
Yeah. Thank you anyway.
Councillor Thomas.
As chair of the housing company, there have been some very productive discussions going on behind the scenes on all these questions of governance, and we're at a point now where the company has had recommendations from its solicitors. They've been looked at by the council, and the 2 groups of solicitors, I think, are moving towards a consensus. So just to kind of give you some kind of assurance that these issues are being addressed, and I think things are moving forward.
Councillor Barnes.
See, the other one, in a sense, the elephant in the room, and I don't want to be too specific about this one, but again, it seems to be the corporate management team have got it in hand, is we have a huge capital programme for a small authority, and that is bound to pose a risk. I'm not sure how serious it is. It is being mitigated by a review at the moment, but it seemed to me odd that it doesn't figure on this list anywhere. And it's almost highlighted by the fact that one of those projects has come up in terms of governance, but actually it's the overall level of the capital programme, not necessarily one specific one, which is a potential threat to our financial stability.
And we are doing work on this, and I probably could reflect that a bit clearer in the risk register, but we're reviewing all of the capital projects. We're going back to the original business cases, and we're taking the opportunity to stop and see what we should do instead. So that risk has presented us with this opportunity where we can stop and see whether all the projects are viable and which ones we do need to continue with.
It may be, Chairman, that when we're doing the review, rather than simply keep adding, we do consider whether some of these, the national fuel shortage one, have dropped to such a point where they really are not corporate risks.
Yeah, no, that is going that way. But I think that was a very valid point you made, and I think I've got very affirmative nods and things here. But Ben wants to say something on that.
It's just on the matter of the capital programme. Obviously, it's a bit of a shifting board at the moment with regards, particularly the very generous investment that we seem to be attracting from government. We've obviously been awarded the Levelling Up Partnership status, which we've been reassured has a flow of money behind it. And then most recently, yesterday's announcement of one of these town-style deals. We are the endowment-style deal that the government are setting up. So I think in terms of reassurance, in terms of our level of risk, I think most of our capital programme going forward will look at how we are deploying external funding rather than utilising our own funding to the same extent that we might have done maybe 6 months ago when we didn't have as much money coming into the area.
Right, thank you. We're coming to the end of this one. I'm just thinking, because what you've just said about the capital programme, I can't see specifically a risk identifying that, although we've now got 17 and 18 addressing the housing company. The work that Anna just said being done isn't reflected in here, and I wonder if we should ask the SLT or CMT, or which body it is, that they should consider putting a risk on there of the capital programme.
Well, Chairman, with the thought there are one or two risks which probably ought not figure any longer on the corporate risk register.
Yes, and so I suppose I'll make it easier. I'll move these bits I'm just going to say, and then we can find a seconder, which was adding that. I was asking for a review of risk 2, which was the social, the housing, etc., and to ask for a review of 12, which was, remind me, the coastal, the flooding and work on that. So, capital risk, review 2, review 12. Do I have a seconder for those? Oh, sorry.
Duncan Ellis has his hand up. Perhaps we ought to hear him before we vote.
Well, if you insist. Duncan.
Thank you, Chair. Thank you, Councillor Barnes. I was just going to say, I think in terms of the capital issue, I think that probably sits, you're right, it's not specifically raised. I think that sits best within risk 4, so failure to operate within a sustainable budget, because all of that capital investment ultimately impacts on your revenue position and our capital side of things as well. So I think we can expand that one rather than have it as a completely separate thing, because it's all interlinked with the budget. I think that's probably a sensible place for it, but I do think we need to draw it out within there if that's acceptable to people.
Thank you, Councillor Barnes, for spotting his hand. Thank you, Duncan, for amending my proposal, and I think we'll go with including it and expanding 4, reviewing 2, reviewing 12. I've moved it. Anyone second it? Thank you, Councillor Gray. All those in favour? That's carried. Thank you. Then we've also got to consider recommending to full council that they adopt the changes in the policy. I'll move that. Anyone second? Councillor Gray again. In favour? Thank you. That is carried. Sorry, then noting the report overall. Nods around the room. Thank you. I know it's the last one, it's here somewhere. Right, agenda item 10, the work programme. Obviously, we've done tonight. Next time includes standards and only another report from Gary on internal audit and the Grant Thornton hoped for, promised, wished audit findings report. Then March, back to pretty much usual. I don't think we've got something which wouldn't be on the work programme, but I know Duncan and I will discuss it, is doing the self-assessment again this year with members. And I think from someone I saw a suggestion that the members could be asked to look at the risk appetite within that within that self-assessment, because I don't think there's a need or there's a plan to review the whole of the risk appetite again, but I think there was before it was passed to members as well as officers to complete. I don't know if I've got nods from some and puzzled looks from others, and Duncan's just ignoring me. So we'll pick that up another time when we talk about self-assessment. Has anyone got any comments on the work programme? Oh, yes.
Am I right in saying we was going to get, now number 18's been put in, an audit report on housing company in Blackfriars in this quarter up to December? I saw someone mention it before.
Yes, where?
I can't see it on there at all.
I think that must be, I will check that is in the internal audit reports to the 30th of September, because it was the audit department and Gary. Oh, Gary?
Hi, Chair. Yeah, that's going to be. It's been done. It's Blackfriars Spider Road report's been done. It's going to be reported in December meeting.
Thank you, Gary. Thank you, Councillor Biggs. Yes, Councillor Barnes.
I'm not pressing for this to come necessarily here, but can we explore where the capital standstill reports are going to go? Will they go to overview and scrutiny, or will they come here? I don't need an answer tonight, but I think that needs some thought, and one or other work programmes need to be adjusted.
Just want a smile from you, Duncan, to say you got that. Thank you. Thank you. In that case, I'll bring this meeting to a close at 2100. Thank you very much, everyone, for your participation. Thank you.